So, which are the most amazing, wild performing investments in 2018? Which were those investments, the top performing investments in 2017? And those performances, those wild performances, those top performances, are they guarantee the future? Are they guarantee that we're gonna have the same returns in 2018? So let's compare all investments, Dow Jones, cryptocurrencies, stock market, bond market, currencies, gold, commodities, to everything, and see which were the best performances, and see if we can use those tools, those data, those sources to tell us what to do in 2018. So let's start with Dow Jones, Bitcoin versus Dow Jones. So on the left hand side we see top performing Dow Jones. We start from Boeing 90%, Caterpillar 70%, Apple 46%, Visa 46%, Walmart 43%, Home Depot 41%, McDonald's 41%, United Health 39%, Microsoft and then 37%, American Express 34%, Cisco, Intel, DuPont, JP Morgan, Nike, Pfizer 11%, Coca-Cola 11%, and then we have Procter & Gamble, and we have negative returns for Verizon, Merck, ExxonMobil, IBM and General Electric. On the other hand, we have cryptocurrencies. First is Ethereum platform. Ethereum, the second largest market cap in cryptocurrencies, with return 9,000%. Ripple 5,000%, Litecoin 5,000%, and Bitcoin 1,400%. This is huge returns comparing to Dow Jones. So if we assume that we have $1,000, $2,000 or $10,000 invested in those currencies at the beginning of the year, you do the calculations and you see what money we would have right now. So let's move on to Bitcoin versus S&P 500. So we start with technology. We had in 2017 37% return, consumer discretionary 21%, materials 21%, healthcare 20%, financials 20%, S&P 500 20%, industrials, consumer, utilities, real estate 7%, and then we go to negative returns, energy minus 3.5% and telecoms minus 5.5%. On the other hand, we have cryptocurrencies with 9,000, 5,000, 5,000, Bitcoin 1,400, 10%. So then again, the difference is enormous, and so let's see what happens in 2018. But before we do that, let's move on to another famous comparison on the media is cryptocurrencies versus gold versus commodities. Is it Bitcoin digital gold? It's considered to be digital gold. And as we see here, let's start with Bitcoin. It's 1,400%. And let's find out where is gold. Gold is 13%. So the first one commodity was palladium with 54%, lumber 42%, aluminium 34%, copper 31%, zinc 27%, rice, lead, nickel, Brent oil 17%, and then so on. And then again, cryptocurrencies with huge returns. So let's move on to cryptocurrencies versus dollar. National state currencies. As we see on the left hand side, we have euro. The first one, the top performing was euro with 14%, and then the rest state currencies they follow. And then again, we don't have to do any comparison here. And last but not least, let's look what technology did to everything, and what technology and companies with technology they dominate the recent years. They have the largest market caps. The top 5 companies in the world are technology, like Apple with 800 billion, and then we have Google, Amazon, Microsoft, Facebook. So technology, the performance in 2017 was 40%, very large, very nice performance. And then we had materials 26, consumer discretionary 23, industrials 23, financials, healthcare, and so on. And on the right hand side we see the total market capitalization for cryptocurrencies. We started the year in January 2017 with 20 billions, and at the end of the year we end up with 600 billions, 30 times increase. That is 2,800%. So you do the calculations, an initial investment with 1,000, 10,000, 5,000 could return to huge, important, and changing money for our bank account. So is that tell us anything for 2018? Shall we do the same in 2018? Interest rates, they're gonna increase in the United States. Stock market, they had the minor a correction and pullback. Cryptocurrencies, they have a pullback as well. But everyone and the public figures, huge investors, early investors, they are very bullish in cryptocurrencies. They're bullish on Bitcoin, and the adoption is very low. It's like 2% of population is involved with cryptocurrencies. So if we had 30 times market cap increase, why not have 2 trillions? It's not a very huge, it's 3 times more. So let's have a quick look at Bitcoin price chart. As we see here, in 2017 on November we had the all-time high to 20,000. We pulled back to 6,000, and now we rising again. This is a reversal week candle, and we're rising again. But this is a 70% pullback, and someone could say, "Oh, that's a bubble." Minus 70%. That's a huge downside. It's a bubble. But this is not a bubble, because if we go back in the year, each candle is a week, and here we have the months June, April, February. Let's have a look in January. In January the price was almost $900. Okay, $900, and then we grew up, we rose up to 20,000. This is the 1,400%, and then you had the pullback in 70%. So when you have a return 1,400, 70%, it's a pullback, it's not a crash. When you have like 50% increase in the whole year, and then you have 10% decrease, this is a crash. So this is cryptocurrencies. They are very volatile. But they have wild returns. Especially for if you have like 1,000 to 10,000 bucks to invest, it's gonna make huge difference. But you have to be careful to buy in the low season, to buy the pullbacks, to buy the dips, and then to be patient and wait. Thank you very much. Please like, share, and follow us. See you in the next one.